Hello everyone, good morning. Welcome to my YouTube channel again. Today I'll be doing an analysis of the trades I took this week, and also I would have liked to talk about my expectations for next week, but this is X marks holiday and we shouldn't be trading, so I'll just be doing a breakdown of the trades I took this week. As we all know, I trade the ICT concept. And then from the ICT concept, I was able to carve out a strategy for myself, which is the DTL trading strategy. Without further ado, let's dive into the charts. So from this line here, this straight line is the markout for this week that just passed. That is from Monday. And how was I able to trade? As we all know, these black lines on my screen are psychological levels. The purple lines are time frame levels, like lines, like the zones where the markets reacted from several times, from the 2 hours to 4 hours. That is what these purple lines indicate. So the simple is just when the market gets to these lines, I expect a reaction. So from those reaction is where I take my entry and place my trades. So it's simple. From Monday, how was I able to take the trades I took on Monday? First things first, we go to the weekly time frame. We go to the weekly time frame. Network is a little bit slow. So the weekly time frame. What happened in the weekly? This was this week. This was the week before. So the week before, this was what happened. The market swept this zone. The market swept this zone here. Now this is the weekly time frame. The market swept this zone here. This is exactly what they talk about CRT. This is what CRT is about. The market swept this zone and mitigated this FVG. I only do this analysis on the weekly to know my direction for the next week. So this was how I analyzed to carve out my buyers for next week. The market mitigated this FVG, took off this high, this previous week high, and then mitigated an FVG, covered up even up to this zone here. It did that, and then started selling to the downside. And then closed back up here. But looking at this candle here and this candle might be showing bullish, but it is not a bullish candle. A candle with a long wick up, it has a long wick up and a tiny body down. A tiny body down. So this is it. Well, we can't fit it into that. That is not a bullish candle. Sure you get. It swept this zone, mitigated an FVG here, and came to the downside and closed here. So seeing what happened last week, my expectations was for the market to continue to the downside. You know, my expectations could be wrong or could be right, but I just have to follow whatever my strategy says. So my strategy said, if this is how the market plays out, then you have to follow it in the direction at which it has stopped. So for me, it stopped bearish. It stopped bearish. So my expectation was to continue for the next week, looking for sell opportunities. So after looking at the weekly time frame, go down to the daily time frame. Go down to the daily time frame. Market is so slow. So this is it. This is it. This is Friday. This is Thursday. This is Wednesday. This is Tuesday. And this is Monday. Now, this is exactly what I was saying. The market swept this high, mitigated this FVG, and stopped at this zone here. I forgot it. I forgot to highlight. I forgot to highlight that. Okay, this is it. So the market did what? Stopped here. The market has been bullish. Went from here up. Okay, this was Friday. This was Thursday. This was Wednesday. This was Tuesday. This was Monday. So the market started from this zone here. Market started here. Started here and ended here. Ended here. So that's a bearish market. That's a very, very bearish market. And I was very right. I was very, 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 very right to want to look for sales the next week. This was what the market did. It started from here, which was the downside of the market, and then it went back up here, swept that zone, and then came down to this zone. This is a bearish market. It swept that previous week high here, swept that previous week high, and mitigated an FVG. That is a fair value gap. So I was very right to have seen this and then expected to sell. So what happened after that? My expectations for the next week was selling opportunity. So what did I do? I marked out zones that the market has reacted from firstly. And let's go down to the 2-hour time frame. After noticing what I noticed for the market to sell, what I do, I marked out zone that I expected the market to sell from. Which are those zones? This purple line here. This purple line here. So how did I do it? This was exactly how I did it. The market got here, reacted, came down, broke to the upside, came back to that zone, reacted, and went back up to bullish. Came back to this zone again, reacted, and went back up to bullish. Broke through it, came here around this zone, reacted, and then sold to the downside. Came to the zone again and did what? Consolidated, reacted, and did what? To the downside. So the market started consolidating here. And what did he do again? He bounced down to the downside. Came here, reacted by the 2-hour candle, and did what? Broke through it. Came back down, reacted, broke through it, came back, reacted, broke through it, came back, broke through it, did what again? So I was expecting a reaction. I was expecting a reaction. This was why I took a trade here on Monday. This was exactly why I took a trade here on Monday. So These things are just so simple. You just need to take your time, understand it, so you can know how to take out opportunities from it. So this was exactly what the market did around that zone that made me mark out the zone for an entry. And guess what? This purple line I marked here as a 2 hour zone was also aligning with the psychological level. It was these black lines as all psychological levels. So it was aligning with the psychological level. What did I do? I marked out this zone as a flip because my strategy, I only take entries that align with, I only take entries that align with other block, breaker block, or flip. I only take entries that align with other block, breaker block, or flip. So now what happened? How was I able to take the trade I took? Now this was going to be, let's say this is a break of structure to the upside, and then the market did this. I expect this to be what? An order block. The market came here, got there, mark this as an inducement, this as a break of structure, this as an inducement, and then if this zone is aligning with a psychological level, if this zone is aligning with a psychological level, okay, let's see. Hmm, let's see now. 0.00, 0.00. Okay, so if this now is a psychological level and it is aligning here, we see it as an added confluence to do what? Long, to go for a buy. See it as an added confluence to go for a buy. Now, how many confluences has this trade met before I took it? First of all, in the direction of the weekly. The weekly analysis is what determines the direction of what is going to happen throughout the whole week, like Monday to Friday. Then you go down to check out the time frame zones, 2 hour zones, 4 hour zones. Then you align it with your psychological levels. Then you analyze the trade. What did the trade present to you? For instance, this zone presented a flip. This zone presented a flip. This is supposed to be an order block that failed. This is it. So after the market got here and then broke to the upside, came back, it didn't touch, it didn't mitigate. So the market got here, reacted to the upside. So it reacted to the upside and broke. So I expected to do what? Come back to that zone, take an entry, and then sell to the downside. That was just what I did. So simple and so explanatory. Now let's go down to the lower time frame so you can see exactly what I'm talking about. So this was the trade I took on Monday. If you've been watching my channel or you already know me before, you know I trade only gold most of the time. Most of the time, I trade only gold. So, guess what? I took this other block here as my entry. Took this other block here as my entry, and I went for a sell short. That is it. 1 is to 20 pips, giving us an RR of 1 is to 4. Because I only trade gold, because I only trade gold, whenever the market presents another opportunity for me, I always take it. Always take it. And it doesn't mean I do not make losses. I make losses all the time. I make losses all the time, but because of the understanding I have with my strategy, the losses do not matter because they are always little compared to the profit I make. Now, knowing that this market is still selling, I could, but I didn't. I could have sold to this point. But I opted out here with my 1 is to 3 RR. So moving on. Now, that was exactly what happened on Monday. Now, going down to Tuesday, how was I able to take another trade? This is another zone the market has been consolidating. The market has really been consolidating. And then it has given us a what? It has given us a break of structure to the downside on Tuesday. A break of structure to the downside. So we know selling opportunities are still going to be of a high side. But I expected the market to come back up here. So I will be selling from this zone. Yes, this should have been the safest zone to sell the market on Tuesday. But it didn't get to the exact point. It did like it was going to. It did like it was going to. I expected it to sweep this zone as liquidity, which is Asian high. I expect it to sweep this zone and then get here and sell for my 1 is to 3, but it didn't work. Instead, I made a loss because regardless of the fact that the market is selling, the market could decide to do this because there's another block there. React, give me a 1 is to 3, and then react off this psychological level before it starts selling. So this was what I expected. And then I took this buy. Here. It didn't get to up to that. It didn't get to 1 is to 3. It didn't. Instead, took me out shortly. It took me out shortly. So my SL was bigger than this. I think my SL was around something like this. So I was expecting to. I didn't work out. That was the trades I took on Tuesday that made a loss, which was minus 1%. Then heading to Wednesday, heading to Wednesday, the market started reacting of this zone, psychological level. This was it. Go here, reacted, got here, reacted to the downside. So now I've marked that zone as my, I marked the zone as my change of character. Some people call it market structure shift, but I call it change of character. So that is it, change of character. And then I waited for the market to get to this point again, which he did. Did he did at the London session, and then I went for my normal 1:3. I went for my normal 1:3. Here is my 1:3. This is it. Boom. Guess what happened? Another psychological level. So the market was still selling, and then I added another trade when the market got here. When the market got here, when I found out that the market was still going to be selling, and it has started reacting from this psychological level here. So I took another sell. Took another sell. And why exactly do I have the confidence to take another sell? Because I analyzed the weekly time frame to understand that this week more of sales will make me or will help me to be more profitable. So I was just trading in the direction of, I was going aggressively in the direction of the market. So that was it for Wednesday. And then we had a massive sell, and I guess that was because of the news. That was because of the, I think, that CPI news, yeah. Only CPI or FOMC. I don't trade fundamentals, don't at all. I expect fundamentals to align with my technicals. So most times I forget to check if there is news today or not. So that was it. And we got here for Thursday. Thursday, looking at it, there was no trade in the morning. There was no trade in the morning at all because there's no consolidation here. There's no consolidation here to validate if the market was going to sell. There was no consolidation here. That was a higher time frame key level. So nothing like that. And then the market got here. I think I made a loss here because I expected the market to respect this flip, which it did for a minute. It did for a minute because the market got to this zone, gave a reaction to the upside, and broke. And if you understand my strategy, once the market gets back to this zone and it is aligning with a higher time frame zone or a psychological level, I am definitely going to take that trade. So I took the sell and it was there for like 1 hour or so, and then later took me out. So that was a loss for Thursday morning. Thursday morning. So what else? Yeah, I took another trade. Took another trade here. I took another trade here. Long. I went long here. Yeah, I did went long here. And I targeted my 1:3. Why exactly did I take this trade from this exact zone? Found out that the market was only rejecting this level. Weak, went up, came down, went up, reacted here again, and then went up. So I knew there's something here. I knew there was something here. So I marked out that zone as my entry point. And then I targeted 1:3. So this was on Thursday. This was on Thursday. This was still on Thursday after I made a loss here. And then I recovered my loss and had a very little profit. So what else did I do? What else did I do? This was it for Friday. While the market was doing what it was doing, um, let's see. I didn't take this trade. I didn't because the market didn't mitigate. Didn't mitigate. Didn't. So I didn't take that trade. So on Friday, this was what happened. The market started going to the upside. Yeah. Came here, reacted, and boom to the upside. Came back down. I didn't take those trades. So I'm seeing an opportunity here, but I didn't take them because I didn't spot them. I didn't spot them before they happened on Friday. But I took a trade. Yeah, I took a trade on Friday and I took two trades. After the market has given me a break of structure to the upside, I started looking for where to take my entry from. So I found out that this is a psychological level that the market has been reacting from. For instance, the market go here, this here, to the upside, broke. There was even a reaction here, and then it got here again, and then it came to the downside, and then it came to the downside here, and then it went up, came here, looking at the 5 minutes, little reactions here, and then to the upside. So looking at this, now I was wondering, what do I do? I came out with my feed. I don't know if you've heard of optimal entry, OTE. This is an OTE trade. So I marked out my zone from the low to the high. And guess what? The market presented a trade from this zone here, this zone here, that was aligning with the psychological level. So I took the buy. I took this buy here, 1:3. 1:3, always. 1:3, always. Always 1:3. 1:3. So I took the trade and the market just kept on doing what it was doing. So I knew that I was expecting to take a trade from a zone where the market will be reacting from, probably higher time frame zones or psychological levels. So looking at this, knowing that the market reacted here, came back down, here you get, and then reacted here, didn't touch it, but it got close and then rejected. Got here again, came back down, broke a little, broke a little, reacted a little bit up, and then started selling massively. So I expected that if this doesn't hold, I expected that if this doesn't hold for a sell, it is definitely going to hold for a buy. So that's exactly what I expected. And that was why I took this buy trade here. I took this buy trade here. So the thing is, if this market didn't close probably yesterday or day before yesterday, today is Sunday, day before yesterday, if this market didn't close on Friday, maybe I would have hit my normal 1:3 weeks to reward. Yeah, 33 pips to make 100 pips. So this was the trade I took throughout Monday, Tuesday, Wednesday, Thursday, Friday. And regardless of these trades I have taken, let's assume the market was still going to be active. What would I have done? What would I have done this new week that we are entering? What would I have done this new week that we are entering? So let me clear this so chat will be. I want us to see the candles clearly. What would I have done this new week? It's simple. As we can see, okay, let's clear this also. This is where the market is right now. Previous week low swept. Let's say previous week low swept. This is, let's assume, this is Xmas holiday, so the market is closed. Previous low swept. This low is also swept. This low has been swept. This also swept. So the market has taken all of this liquidity here. But it doesn't mean it cannot continue going to the downside. So now that it has swept and it is still in between that range, I am not 100% sure because the market has gotten here. Look at it. This is what the market, this was exactly what the market did. It went bullish and then started coming bearish. Now this is where the market is. This is exactly where the market is. So you could continue pushing to the upside or get to a PDRA in between these zones and then start going to the downside. So let's look at the daily. It's bullish. It is bullish. It is so bullish. So we are expecting the market to go bullish. And there is an FVG here that needs to be filled. So probably until this zone is filled, we are going to be looking for buying opportunities. More buying opportunities. Coupled with the fact that this zone just get filled. As we can see, this zone just get filled. So it will be going to the next zone. It will be going to the next zone, which is this. We'll be looking for more buying opportunities next week. That's all. You can follow up if you find my videos educative, if you like my videos and it's something you can relate to, if you've learned one or two. You can subscribe, hit like, share, and then follow up. So when I do more analysis on my weekly trades, you can see how I did it and how I took the trades I took. Peace out.